It is a done deal. A Chinese company's bid to buy the world's biggest pork producer gets the okay from shareholders. I am Philip Yen in Washington.
And I'm Michelle McCory at the NASDAQ market site in Times Square, New York. U.S. markets can't break their losing streak. Consumer confidence slips. And with less than a week to go, Washington's standoff over the budget battle continues.
It is 9 p.m. here in Washington, 9 a.m. in Beijing, and welcome to BizAsiaAmerica. Now, coming up this hour, we will have the latest on food safety in China. Plus, in Latin America, there is a toilet paper crisis in Venezuela. Our top story, Chinese firm Shuanghui's plan to buy the world's biggest pork producer has finally been cleared. The deal gets the U.S. government stamp of approval earlier this month. And earlier today, Smithfield shareholders had their say. Now, CCTV's Huang Hui has been following this story very closely, and Hui tells us what's been happening down there in Virginia.
Sure, Philip. Actually, the meeting was very short, surprisingly short. Actually, originally, I was told the meeting would run for about 40 minutes, but actually, it was finished in 20 minutes. The CEO hosted the meeting, and he encouraged people to share their concerns, but there was no real concerns there. So I would say it went very smoothly, and there was no drama. But I was not allowed to interview their executives because I think they tried to keep very low key. But I was able to talk to some shareholders, and let's see what they told me this morning.
If you expect to grow, and that's a growing market in Asia, we need to be part of that, and I think it's a great move on both companies.
I think Smithfield's care about food security, about the security of growing hogs, will be very beneficial to the new company. They have a very careful process to see that the hogs stay healthy, to follow the hogs through their growth, to process the meat. I imagine China already has things like that, but I think the additional expertise and management knowledge of doing this should help China.
Well, the folks I talked to this morning were very positive about the deal, and they said they had no concerns.
Huang Hui, I want to ask you, I mean, it's excellent that you're there, but also there must be reaction from the Chinese side as well.
Yeah, a lot of Chinese people are very interested in this deal. Many people posted their comments on Weibo, the Chinese version of Twitter. Of course, I mean, some of them were poking fun at Shuanghui because, you know, Shuanghui had a food security scandal before. But I think the vast majority of the comments were very positive. They were proud of Shuanghui because it's able to purchase such a big American companies. Well, some Chinese media coverage also reminds people of being cautious to make investments in the U.S. because they said this one success of this case does not mean it has already become easier for the Chinese companies to make investments in the United States because they still have to face a lot of investigations and evaluations by the U.S. government and the lawmakers. Philip, back to you.
Huang Hui, thank you very much. A very big story in so many ways. China's Commerce Ministry says it's expecting more Chinese companies to make investments abroad. And if those companies are lucky, the approval process involving U.S. companies will hopefully go as smoothly as the Smithfield buyout. Now, there's at least 2 deals that have been blocked in the past. Last year, you may remember the Obama administration told a Chinese equipment maker that it could not invest in a wind farm project on the West Coast. The reason? The land was too close to a military training facility. In the 1990s, President Bush #1 blocked the sale of a U.S. manufacturer to one of China's aviation companies. Now, we're going to have much more on this. We're joined by Liu Baocheng, the Dean of the Center for International Ethics at the University of International Business and Economics in the city of Beijing. Thank you very much for joining us on the show. Let me start by asking you, how big of a victory is this for Chinese companies when we talk about takeovers in the United States? Because there is some controversy, but this is certainly a victory.
Oh, this is definitely a triumph. One is that this is the biggest deal between Chinese companies and US companies, representing the exchange and cooperation between the 2 largest economies in the world. And on the other, it also shows a significant step that CFIUS is able to approve this deal given the past painful experience of CNOOC and the Trinity and other companies being disproved for acquisition in the United States. And more importantly, I think this is a significant hallmark for Chinese companies stepping overseas in a diversification manner, because most Chinese companies get engaged in overseas operation in the mining industry and raw material supply, but this is more technological intensive, and also it deals with the most important sector that really determines a Chinese CPI, which is the pork industries.
Professor, are you surprised how quickly this deal was actually done? I mean, some Americans have mentioned the word and concern about food safety, and it's been tossed around, but overall there hasn't been much blockage in terms of this deal getting done, and it got done relatively quickly.
Well, yes, there has been a number of comprehensions. One is the worry about the concern from the CFIUS, which has really not really presented a stumbling block so far. And also there were talks about alternative bids, which is not very successful. And so far, I think it is a fair deal, done fairly well. It means that the Shuanghui, although lack of international experience, they are pretty professional in their performance. And the media is also giving a lot of positive signals about this deal. And I think this is a win-win situation, that really it is the mutual benefit that dictates the whole picture.
Liu Baocheng, stay right there. I want to bring in Alan Barber, president of Denver Hainan Corporation. You've been following this very closely as well. Welcome to the discussion. And I'm going to ask you the same question about food safety. It has been brought up before, and the United States has blocked these different acquisitions because of military or sensitive technology. But in the case of food, a lot of Americans are always concerned about food safety, of course. Are you surprised how quickly this deal got done?
I am surprised how quickly it got done. And it's good that CFIUS did approve it. On the food safety issue, that should not be a problem, given that those plants that sell product in the U.S. are regulated by the FDA and others. So there would be no changes in with the ownership.
If food is fair gaming, that opens up a whole new realm of potential acquisitions by the Chinese in the United States. Does this mean, and this question is for either of you gentlemen, I'll let Alan go first, but does it mean more acquisitions in this area in the future?
I think it does. I think there'll be a number of acquisitions in the food industry in the U.S. and China. We have to remember that China has, depending on the estimates, anywhere from 280 to 300 million middle class who are looking for better food products. The U.S. can supply those. Therefore, it's a good deal for both sides.
Liu Baocheng, I mean, does this mean more deals in the future, not just in food, but other industries as well, now that CFIUS has seemed to be on a speedy approval process?
Yeah, definitely. I think there is a great complementary between the two largest economies, and China is in need for better technology and better management skills. And so far, also, the Chinese companies are able to leverage on the international financial market, so they have quite the capability to step overseas. And if you see the recent performance over the past 5 years, so China's overseas acquisition has been moving by roughly 50%. Given the world economic recession, this is very aggressive. And also that more and more regulations will be published by the Chinese government to support the overseas acquisition, overseas investment in the form of deregulated the foreign exchange control, in the form of certain subsidies, and more is really in the strategic advice from the academic circles are concentrated to support Chinese overseas to get engaged in the ODI, which is the Overseas Direct Investment Programs.
All right, Liu Baocheng, Alan Barber, both of you, thank you very much for joining us on this very important topic. And just as Smithfield shareholders raised concerns about food safety, juice makers in China are also under pressure as well. A new media report claims that some companies knowingly use rotten or bad fruit in their products in order to save money. Government teams are investigating, and so far they have not yet uncovered any bad fruit. Now, coming up next on the show, we'll go straight to New York. The Clinton Global Initiative kicks off there. The biggest business leaders, celebrities, and politicians all getting together to plan social change for the world. We're back in just a moment.
We are CCTV America.
Welcome back to Biz Asia America. We are just 1 week away from the start of one of the most controversial initiatives of Barack Obama's presidency, the Affordable Care Act, known here in the United States as Obamacare. Now, the airwaves are full of ads both criticizing the new law and calling on people to enroll. Well, on Tuesday, it was President Obama himself who took to the stage to promote Obamacare with the help of the man he often calls the Secretary of Explaining Stuff. That's former President Bill Clinton. CCTV's Tracy Tandon was at that event and joins me now live. Tracy.
That's right, Michelle. None other than President Obama and former President Bill Clinton were there today at the Clinton Global Initiative meetings here in New York to talk about President Obama's signature reform, which is the Affordable Care Act. Him and both President Bill Clinton spoke about what the benefits of this act were going to be. It was a concerted effort to really inform the general public, as well as rally together business leaders and politicians from across America to discuss the benefits of the act. He said that not only would this act be providing health care to all those uninsured Americans across the country, but in fact, it would actually also help in reducing America's structural deficit.
The reason that we have not only current deficits, but also projected long-term deficits, the structural deficit that we have, is primarily based on the fact that we have a hugely inefficient, wildly expensive healthcare system that does not produce better outcomes. And if we spent the same amount of money on healthcare that Canada or France or Great Britain did, or Japan or any other industrialized country, with the same outcomes or better outcomes, that essentially would remove our structural deficit, which would then free up dollars for us to invest in early childhood education and infrastructure and medical research and all the other things that can make sure that we're competitive and growing rapidly over the long term.
Obama said that in order to get this Affordable Care Act off the ground, he is going to be raising taxes, and one of those taxes is to increase the Medicare taxes on the wealthy. But the bottom line is that he said today that ultimately nothing is for free, and that perhaps some short-term pain may result in long-term gain. Michelle.
Tracy, Obama's Affordable Health Care Act has been very controversial. Why is it so unpopular with the general public?
That's a very good question. It is, in fact, very contentious. A Wall Street Journal conducted a poll earlier this month that showed a whopping 69% of Americans say they actually don't fully understand the act. That means only 30% of the Americans surveyed say they have some decent or good grasp on what the act is all about. But in fact, Michelle, President Obama and both President Bill Clinton today reiterated that America's healthcare system is, in fact, the worst in developed economies, especially when you compare America's healthcare system to the likes of Canada, France, or even Japan. So both of them continue to reiterate that the fact that this act is not going to be expensive, hence the name Affordable Care Act, that all millions of uninsured Americans are going to benefit from it. And also, starting October 1st, all those uninsured Americans will be able to log on to the government's website and sign up for a new coverage plan from a variety of insurance options in the marketplace, Michelle.
Tracy, still a very controversial act indeed, and hopefully the Secretary of Explaining Stuff made things a little clearer. Thank you so much, Tracy Tandon, live for us in New York. And coming up next on BizAsia America, the foreign direct investment going into Brazil has doubled, but it's not enough to cover a gaping hole in the economy. And we'll look at how Brazil's aspiring technology entrepreneurs are increasingly looking to Silicon Valley for inspiration for the next great thing. We'll have a special report, but before that, Wall Street's losing streak continues. The Dow and the S&P closing in the red for the fourth day in a row. But Facebook shares were on fire today, bucking the downward trend and hitting a new all-time high.
What's great about CCTV America is that we take you around the world, and together we learn about the issues that affect us all.
We're here to tell stories in a compelling way, and I feel this makes us unique.
It's our job to make sense of this fast-paced, complex world.
Every story worth covering has a real impact on real people.
And if it's worth covering, you can bet we'll be there. Whether it's in Greenland, the Amazon,
or right back here in Washington, we'll take you to the heart of the story.
So join us each day on a journey around the globe on CCTV America.
Take a spark of intuition and a helping of inspiration, a dash of contemplation and a heap of experience. Add a good handful of character, then turn on the heat. We are CCTV America.
You're watching BizAsia America, and we now continue our week-long special coverage, Brazil Uncovered. Tonight we're focusing on Brazil's investment potential and economic opportunities. So let's first go live to our correspondent in Sao Paulo, Paulo Cabral. And Paulo, thanks for joining us again tonight. We've got new numbers out today on Brazil's foreign direct investment and on its current account. We want you to dig through those and explain them to us. But first of all, let's start off with an explanation of what exactly current account means. Paulo?
Well, the current account is actually the difference between all the money that gets into the country, for example, through exports or foreign direct investment or financial investments, and the money that goes out of the country to pay for imports or profits that companies send to their headquarters, or even the money that tourists spend when they are abroad. And yes, Brazilian current accounts have been worsening, and that's for actually everything is going bad. Exports are dropping, the imports are getting more expensive, people are spending more money abroad, and very importantly, foreign direct investment is dropping in Brazil, and that's actually also a sign of the less confidence that investors have in Brazil in this moment, seeing this lukewarm information getting out of here. But it's also interesting to notice that Brazilians are spending more money abroad. It's one of the informations that the central bank has released today, and this even with the depreciation of the real, that makes things more expensive abroad for Brazilians. And economists say that this happens because despite the economic slowdown, employment and wages are still in pretty good shape in Brazil.
How worried is the government about these latest figures, and what have the authorities been doing?
Well, the president of the Brazilian Central Bank, Alexandre Tombini, he said that this current account deficit is still manageable, and that's mainly because Brazil still has very good international reserves in excess of $370 billion. And also, I mean, the depreciation of the US, of the Brazilian currency is a problem in a sense, but also may help to boost Brazilian exports, and this would bring some more money in the country and also help to balance Brazil's current account. So what the government says, it's manageable, but we have to think also there is the risk. I mean, the last Fed meeting, the economic stimulus in the United States is likely to continue for a while, but if it ends, then this would be a problem in Brazil. Probably interest rates would have even to raise to keep capitals flowing into Brazil, and this would then be a bigger problem for this country. So investors will be looking very carefully at Brazil's current accounts. It's certainly one of the weaknesses in the Brazilian economy right now.
All right, Paulo, thanks for tracking that for us. Paulo Cabral live in Sao Paulo. And like China and the US, Brazil is in fact one of the world's top destinations for foreign direct investment. In fact, some surveys rank Brazil as the third most popular choice in the world for FDI after the US and China. So which foreign countries are betting on Brazil? Here are Brazil's top 5 foreign investors based on various ranking reports. In 5th place is France. From retail to oil and gas to telecommunications and transport, French investments in Brazil are in fact very diverse. Chinese investments, on the other hand, are concentrated in commodities. Now, while China is now Brazil's 4th largest investor, after being number 1 in 2010, China still remains Brazil's top export partner. Number 3 is Spain. The pain in Spain has been Brazil's gain. Spanish companies have been moving to Brazil to cash in on booming demand from Brazil's growing middle class that many expect to be turbocharged by all the foreign tourists heading to Brazil for the 2014 World Cup and 2016 Olympics. And at number 2 is Italy. Brazilians love a boa vida. That means the good life in Portuguese. So it's not surprising that Brazil has become a target market for Italy, which is one of the world's premier exporters of high fashion and luxury goods. And drum roll, please, Brazil's top investor last year, mostly in infrastructure projects, Portugal. Now, that shouldn't come as much of a surprise, as Brazil is indeed a former Portuguese colony, so the two countries have a common history, a common language, and of course, a common love of football. And coming in just outside the top 5 countries investing in Brazil is the United States. It comes 6th on this ranking and is Brazil's 2nd biggest trading partner. And one of the main areas of investment is technology, specifically startups. Mark New reports now on a new program designed to bring Brazil's young tech to Silicon Valley to build companies that cater to the Brazilian market.
Walking on hallowed ground. That's how many of these Brazilian entrepreneurs feel about visiting San Francisco and Silicon Valley.
Very excited. It's like being in the source of everything. If you want to learn about a social network, you can go to Facebook, you can go to LinkedIn, to business connections.
These 10 entrepreneurs visited many of those companies, and this one, Autodesk, whose software in some way helped create everything here on display. The nonprofit group Brazil Innovators sponsored the exchange.
Great culture of exchange expertise. We don't do that a lot down in Brazil. We should do that more.
This collaboration culture of Silicon Valley is one reason Brazil's Ministry of Trade and Commerce just opened a San Francisco branch for Apex, an office that seeks to promote investment.
Venture capitalists here like to do business with partners. They don't look at each other as competitors. So this is another feature, very unique, I think, from Silicon Valley that we have to bring to Brazil.
A place called Silicon House is trying to bridge this gap between Brazil and Silicon Valley.
That's very applicable inside of their four walls.
Brazilian co-founders Enrique Citone and Andrea Lito run a 3-week program that allows entrepreneurs from around the world to stay at this house in Mountain View, a key city in Silicon Valley and home to Google. 30% of the guests who've stayed here are from Brazil. Silicon House provides feedback, networking, and perhaps most important of all, insight into Silicon Valley culture.
It's not that it's okay to have failures here in the Valley, but it's well accepted. Because if you have failed before, you actually have learned something, and your next endeavor, the chance for that to get more successful is bigger, is greater. In Brazil, if you fail, you are doomed. It's very hard for you to recover.
Silicon House founders also point out another big difference they hope will catch on in Brazil. They say here in Silicon Valley, people are willing to wait longer to get returns on their investments. That affords startups some breathing room to work on their product and strategy and to hopefully get things right. Mark New, CCTV, Mountain View, California.
And joining us now with more on Brazil's tech industry and investment environment is Luiz Edmundo Rosa, Director for Education at the Brazilian Association of Human Resources and Vice President of Grand Bio, a Brazilian biotechnology company. Thank you so much for joining us tonight, sir. Now, let's get straight into it. As Mark New just reported there, the Brazilian government has opened an office in San Francisco to help Brazil's tech startups grow and tap into the U.S. market. What do you think are some of the main challenges for Brazil's tech industry?
I didn't hear.
I think we seem to have a bit of an audio issue there, sir, so I'm going to repeat the question. Mark, can you reporting that the Brazilian government has opened up an office in San Francisco, and we're looking at what the challenges are for the Brazilian tech industry.
Okay. This effort is of the Brazilian government in opening in
All right, we seem to have
California
some kind of a technical...
is a consequence.
All right, we seem to have some kind of a technical issue there with Luiz Edmundo Rosa, so we're going to move on. And coming up next on our week-long installment series, Brazil Uncovered, you want to stay tuned for that. That's going to happen tomorrow. We're going to focus much more on this South American powerhouse. All week, we're focusing on Brazil. A lot of insight and analysis you certainly don't want to miss. We're going to take a quick break, but coming up on BizAsia America.
Good evening, everybody. I'm Mike Walter with a look at your top world news headlines this hour. Kenyan President Uhuru Kenyatta has declared an end to the four-day mall siege in Nairobi. Kenyatta says 5 Islamic attackers were shot and killed by troops and several suspects are in police custody. At least 67 people have been confirmed dead. It's unclear how many more hostages may have died when 3 floors in part of the mall collapsed. The president has called for 3 days of national mourning starting on Wednesday. It was not clear what caused the structure to come down. The United Nations General Assembly is underway. It opened Tuesday in New York. More than 100 heads of state are attending. Dominating headlines out of Tuesday's opening events, Iran and Syria. The new Iranian government appears to be pursuing talks with the West over Tehran's disputed nuclear program. And the General Assembly allowed world leaders to air their views on Syria. There still seems to be a lot of work ahead to reach a resolution there. Usagi continues to weaken after sweeping across South China's Guangdong province earlier this week. The superstorm is blamed for 29 deaths. More than 9 million people were affected. Usagi also destroyed more than 15,000 houses. Direct economic losses have reached $2.9 billion. Provincial authorities have dispatched over 2,000 relief workers to the area. Those are the top world headlines. I'm Mike Walter in Washington, D.C. BizAsia America continues right now.
And welcome back to BizAsia America. I'm Michelle McCory at the NASDAQ market site in Times Square, New York.
And I am Philip Yen here in Washington, D.C. And here's some of the other top headlines we are watching in the business world. The U.S. Federal Reserve will talk to some news organizations after parts of its policy decisions were leaked earlier. The Fed says it's concerned about the heavy trading of gold futures just seconds after it released market-sensitive information on Wednesday. Airbus says the number of planes in operation around the world will double over the next 20 years. The aircraft maker is citing China's surging demand for the forecast. It said air traffic will grow by nearly 5% every single year, and that means 30,000 new passenger and freighter aircraft is needed by the year 2032. And fast food giant Burger King will soon sell a low-calorie fry in its latest war against McDonald's. The fries has 40% less fat, 30% less calories than the fries at McDonald's. Michelle?
Oh, Phil, gotta love low-calorie fries. All right, we're focusing on Canada now, where retail sales continue to show modest growth. Sales grew 0.6% in July to more than $39 billion US. And that's good news for millions of Canadians who rely on retail spending for their jobs. So for more on this, let's go to CCTV's Christian Yeo at the Toronto Stock Exchange. Christian.
Hi, Michelle. Yeah, the main driver of July's rise, more being spent at the gas pumps, also at clothing stores as well. We're seeing an interesting shift in the way people are buying cars here, less spent on new vehicles, more on used. And it was a good month for furniture retailers. Not such a good one for electronics stores, sales slumping there. Overall, though, this is the fourth monthly rise in 5 months. And that is brilliant news, not just when you look at tax revenues in the retail sector, but for jobs. It's incredibly important to the Canadian economy. 1 in 10 of the Canadian workforce is employed in retail.
For Crystal Bridger, retail has paid the bills since high school. With a passion for gadgets, she put herself through college selling electronics to the public.
I kind of went back and forth from part-time to full-time in the retail environment while I was doing my college.
Even after graduating with a business degree, the lure of the shop floor kept her in retail.
Day to day, it's always something different. There's always something to learn. I enjoy lots of different activities, dealing with the customers, setting up new systems, taking a new piece of technology, figuring it out, seeing how best to be able to explain that to a person and really have it enrich their lives.
Crystal's not alone. Retail employs more people here than any other sector, 11.5% of the workforce based on Canada's last census. How many of them do so by choice rather than necessity is another matter. Canada has a worsening youth unemployment problem. In a difficult jobs market, retailers are finding themselves with the pick of qualified graduates.
I have one member of the team who has a math degree. I have a political science degree. Another gentleman who I picked up from the Sony store, he had an economics degree.
Impressive credentials, but are they relevant in retail? Crystal's boss believes so.
With any degree, it shows that you've gone through university, you have the discipline to stick with the program. You also have some diversity of skills. I mean, in terms of writing reports, we know you can read a lot. We know how to handle deadlines.
For many, it's a temporary stopgap, but for graduates like Crystal, the stability and environment of retail is enough to keep her from looking elsewhere.
On the off side, you have the weekend work and a little bit later hours in the evenings, but you're home every night. You're not doing the travels as much, and you get to do something a little different every day, not sitting at a desk.
So Canada is a nation of retailers now, and there are concerns about pay and prospects in the industry. But the reality is that Canadians are relying on retail now more than ever. And the hope is that as the size and the caliber of that workforce increases, so will the reputation and the viability of retail be as a career path, Michelle.
Well, Christian, there are a lot of very well-known concerns about the retail sector in general around the world regarding pay, conditions, consumer confidence and spending. Putting those concerns aside, would you think it's wise to have so many workers dependent on the retail sector?
Well, many economists would say absolutely not. The problem with retail is that it's focused on domestic consumption, domestic spending. So when the economy slows down and spending decreases, that puts retail jobs at risk. When spending stops, jobs can disappear, and that was demonstrated at the start of this year. Sears Canada and Best Buy both announcing job cuts worth around 1,000 jobs just gone in January. When you compare that to manufacturing, job security is hedged more, not just on domestic performance, but performance around the world, lots of clients in other countries. So with that in mind, retail is a risky business and is more susceptible to fluctuations in the jobs market.
All right, Christian, thanks as always for covering that for us. Christian Yo, live at the Toronto Stock Exchange. And focusing back home in the U.S., new data on the U.S. housing market shows that home prices continue to climb in July, up 12.4% compared to a year earlier. However, the gain from June to July slowed down, and that suggests that the rate of price increases may have peaked. Now, even with this year's rise in prices, the overall Case-Shiller housing index is still down 21% from its record high in June of 2006, and our rising mortgage rates are also impacting home buyers. Meanwhile, the confidence of Americans in the U.S. economy also fell in September to the lowest level in 4 months. Their main concerns, stagnant wages and whether more new jobs will be created in the next 6 months. And for more analysis on today's economic data in the U.S., we're joined by Gad Levanon, Director of Macroeconomic Research at the Conference Board. Gad, thanks so much for joining us tonight.
My pleasure.
So we got consumer confidence numbers out today. The index fell from 81.8 to 79.9. Not a huge drop. Firstly, put that number into perspective for us.
Right. I would say it's not a good number, but it's not alarming yet. So the present situation component of this index actually kept growing. And the expectation component declined, but it's still in a territory that signals growth. So it's not alarming. It's just not strong.
But what does 79.9 mean? Put that in relation to, say, where we were pre-recession.
Right. So the thing that we should compare to pre-recession is the expectation component.
Mm-hmm.
And that is, as long as it's above 80, which it still is, that I think signals economic growth. It's not strong. In general, in this recovery, consumer confidence stayed at quite low levels. So it's still disappointing compared to a regular recovery, but it's not anything alarming yet.
Yet, you say. Do you expect it to be alarming anytime soon?
Well, you know, I think households will be very startled if there is something happening with the fiscal crisis that may happen. The surveys for this release were cut off at September 13th. So that's almost 2 weeks ago. So all the anxiety that builds up towards the debt limit and the budget were not in this survey yet. That's only happened more or less in the previous week. So I think when we get more recent data from the consumer confidence, maybe we'll start feeling the impact of this.
Before we focus on Washington and the big showdown and impasse over the budget, what were the main concerns of consumers in this most recent survey?
Right. So 3 out of the 5 questions in this index are related to the labor market.
Mm-hmm.
And I think the softening of the labor market and the continued very weak growth in wages, I think that's the main concern. Despite the 4 years of recovery, wages are growing at historically low rates, and that, I think, is impacting the purchasing power of households.
Now let's focus back on Washington and the standoff over the budget battle there. How do you think that's going to be resolved, and what kind of impact do you think this is having on consumers and businesses and investors in the interim?
Right. It's hard to tell. I would say that the developments are disappointing. If a few months ago the worst case scenario was another year of sequester cuts, now it seems like it's the best case scenario. Mm-hmm. Worse than that would be a government shutdown or some startling of the financial markets as a result of the debt limit. I think the probability that one of those things will happen is quite large. So I think if we just end up with 1 more year of sequester cuts, that would be actually a good outcome. Now, the impact of that could be quite large depending on what happens. It's impact on employment, on especially government spending is going to be quite large. So we will see. It's really hard to tell.
Yeah, a lot of uncertainties looming on the horizon. Then let's focus on what we do know, and that is that the U.S. housing recovery does seem to continue quite strongly. The S&P Case-Shiller Home Price Index shows that home values rose the most in 7 years, but we are starting to see the rate of appreciation declining. Are we reaching a peak there?
I think there will be some softening in the housing market. So the most leading indicator of housing, which is mortgage applications, that after the increase in mortgage rates plummeted. Refinancing declined by 60–70%, but even purchases, mortgages for purchases, declined by about 10–15% and doesn't seem to bounce back. I think this is very concerning. I think it's one of the things that the Fed is worried about, because housing became the strongest engine for the U.S. economy, and if that doesn't continue, the U.S. economy will be in trouble. So I think I wouldn't be surprised if we'll see some more weakening in the housing market.
Well, we're seeing a decline in the application for mortgages because mortgage rates are on the rise.
Right.
Where do you expect mortgage rates to go over the next 6 months and 1 year?
Well, I think it depends a lot on where the Fed goes. And I think with so much uncertainty with the government, I think the Fed will be reluctant to taper in the October meeting and maybe even later. So it all depends on what's happening in the government. I think that was the main reason why the Fed decided to postpone the tapering. Right. If there is no good resolution of that, I don't think that they will taper anytime soon.
Back to the hands of the Fed. We're going to have to leave it there. Thank you so much, Gad Levanon, Director of Macroeconomic Research at the Conference Board. And coming up on BizAsia America, the ongoing demographic shift happening in the U.S. is opening up new markets for one of the country's fastest growing minority communities. Plus, it's all going to pot. Venezuela takes drastic steps to address the country's toilet paper shortage. We'll be going to Caracas for a special report you don't want to miss. Stay tuned.
Brazil is an emerging global economic power with a hunger to grow even stronger and rapidly. The country faces massive challenges ahead as Brazil's future lies in the balance. We'll be bringing you a series of reports each day as part of our special week-long coverage, Brazil Uncovered, starting September 23rd on CCTV America. In a business world of information overload, we strip away the complexity and confusion to give you the essence of financial news. Pure value. BizAsia America. We are CCTV America.
Welcome back. Venezuela is taking drastic steps to address the toilet paper crisis. It seized a toilet paper's plant, claiming that they hoarded toilet paper, which ended up driving up prices. Now, some are critical and worried about this extreme tactic. Martin Markovits reports.
In a country where toilet paper has become a hard-to-find commodity, Venezuelan President Nicolas Maduro has decided to take action. State television captured authorities temporarily seizing a manufacturing plant owned by one of Venezuela's biggest toilet paper producers.
We proceed with this temporary seizure, in which teams will check the entire production process of the toilet paper.
Venezuela has been plagued with shortages of basic household goods, including toilet paper, for the past year. Maduro and Venezuela's United Socialist Party blamed the business community for these disruptions.
What is going on is hoarding, and hoarding is an illegal act. The manufacturer hides these products so they don't put them out to sell. So that is why the prices will go up.
Government takeovers are common in Venezuela. Maduro's predecessor, Hugo Chavez, took over hundreds of private businesses and ranches and converted them into government-run cooperatives.
But Venezuela's opposition and many economists believe these cooperatives are poorly run. They say inefficiency is the reason overall production has fallen and why Venezuela must rely so heavily on imports. Manufacturers also claim price controls have further crippled productivity. After being elected president earlier this year, Maduro signaled he would be more business-friendly than his mentor, Hugo Chavez. Maduro's right-wing critics were skeptical and consider Venezuela's toilet paper politics evidence that their doubts were justified. Martin Markovits, CCTV, Caracas.
The United States will be celebrating Hispanic Heritage Month this month of October. The month-long commemoration highlights the Hispanic community's growing economic influence, and that's underscored by the recent study that says the number of Hispanic-owned companies will double this year. Ginger Vaughn takes a look.
From mom-and-pop shops to corporations to enterprises, Houston, with a population of over 2.2 million, is proving to be a hotbed for Hispanic-owned businesses. Jaime Meraz, president of a trucking company, says the booming oil and gas industry here keeps his family-run operation in business.
My dad started about 9 years ago with one truck, and he grew his fleet up to like 50 trucks almost. And we're trying to do the same thing. We're trying to follow in his footsteps.
Hispanic business owners here in Houston say the booming economy supported by the Latin community welcomes entrepreneurs. The Houston Hispanic Chamber of Commerce, the largest in the U.S., says the fastest growth among Houston's 89,000 Hispanic-owned firms is among female entrepreneurs.
The employment that we seek when we're staffing projects is in abundance. We last year finished a project that we had for 12 months, and we were able to employ 450 people for that project.
Jacob Monti, an immigration and employment lawyer, writes about Hispanics in the workplace. He owns a 7-story office building, where over 26 offices are rented out by Hispanic owners, ranging from dentists to marketing firms.
The economy is really booming right now, so there's a need for oil service entrepreneurs, construction companies, cleaning companies, restaurants. That is very good for the Hispanic business environment.
Experts like Monty say with a thriving business environment for minorities and reasonable startup costs, they expect the city's Hispanic business boom to keep up with the growing economy here. Ginger Vaughn, CCTV, Houston.
All right, don't go away. Coming up next on the show, we will have the latest market openings in Asia and how investors there are reacting to the U.S. budget battle in the markets here. Plus, Hairy Profits will look at the booming global hair extension business. We'll find out why the quest to look good could mean big money for hairdressers around the world. We're back in just a moment.
From emerging powers to expanding partnerships, from fighting poverty to combating climate change, booming economies, war-ravaged nations, and everything in between. We capture the changes affecting the most dynamic and diverse continent on the planet, taking you beyond the headlines to the people and their stories. Asia Today, delivering Asia to the world. Culture Express. See the world in color.
We are CCTV America.
Welcome back to Biz Asia America. As a quick look at the market and how they closed out the session. The Dow Jones down 0.4%. The S&P 500 also closing lower by 0.2%. The Nasdaq eking out a small gain, but the markets were doing a lot better earlier on in the session. Had a sharp sell-off at the end of the day. I'm Philip Yen in Washington. Here are the top stories that we're watching. Smithfield Foods shareholders have approved the sale of the world's largest pork producer to a Hong Kong-based Shuanghui International Holdings. This deal will be finalized on Thursday. It is the largest takeover by a U.S. company by a Chinese firm. Shuanghui will pay nearly $5 billion. U.S. President Barack Obama has enlisted a former president to help promote his signature health care law. President Obama spoke today at the Clinton Global Initiative, laying out the law's benefits and the connection to the overall economy. Now, a key centerpiece of that law is the Internet healthcare-based insurance exchanges, which will begin operating a week from today. On the economic data front, U.S. home prices continue to rise in the month of July. New data shows that 20 major U.S. cities surged more than 12% compared to the same period last year. That is the fastest rate of growth for home prices in more than 7 years. Now, as we take a look at the global economy, that also means global shipping rates are on the rise, in part thanks to China's demand for raw materials. But analysts say that the surge in business might not be enough. Zhang Tao reports.
The Baltic Dry Index, or BDI, which tracks global shipping freight rates, rose to its highest in 20 months recently, indicating a surge in China's demand for raw materials imports.
China's demand is strong now, and with the economic recovery in the United States, China will have more exports. The current prices for raw materials are low, so companies are increasing their purchases.
China imported about 70 million tons of iron ore each month during July and August, more than 10% up year on year. The import volume of coal climbed by about 27% last month compared to the same period last year. Some analysts say years of depression in the global shipping industry are coming to an end, but some others maintain it is still too early to draw that conclusion.
Shipping capacity in China is still excessive. The shipping owners are encouraged to use new ships, but they can't afford them because the shipping rates are so low. If the BDI keeps rising for a period of time, they may be able to afford new ships as the freight rates rise.
I think this is a normal situation that may last for roughly 2 years. I don't think the economies of Europe and the US are recovering strongly enough to support the shipping industry's recovery. If the situation remains like this for 3 years or so, the industry is on an upward track.
China's Ministry of Transport says global shipping capacity grew by 10% last year, but that the volume of trade only increased by 5%. That left more than 90 million tons of shipping capacity remained idle. Zhang Tao, ICS4 CCTV, Shanghai.
Quick check on the markets. Investors worried about the U.S. economy, plus the potential for a major budget showdown here in Washington, D.C. That means Tara Josephs joins us live from Hong Kong with the latest.
Phil, Asian markets remain skittish over how soon and by how much the Fed will start closing the floodgates on cheap and plentiful capital flowing to commercial banks. Asian markets continue to sag Wednesday morning on this side of the Pacific. Japan's Nikkei down about 0.2% in early trade. Hong Kong's Hang Seng is lower for the third straight session, and mainland China stocks starting slightly weaker too. Now, some potential good news from Asia for the aircraft industry. The chief of Europe's largest plane manufacturer, Airbus, has hinted he could unveil plane orders in China, saying he would make an announcement at an air show in Beijing on Wednesday. And Reuters reporting that China's BOC Aviation has ordered 25 A320 jets. Leahy told a news conference that the Airbus was selling well and that he expected more orders by the end of the year. The People's Bank of China carried out its largest single-day injection of capital into the country's banking sector in 7 months, quashing worries of another credit crunch in China like the one that zapped global markets earlier this year. China's central bank injected $14.4 billion into China money markets through a bond repurchase agreement. Chinese tourists are now the biggest spenders on Earth, with 200 million increasingly wealthy travelers expected to go abroad by 2020, according to the United Nations. A new report shows Chinese tourists are now seeking more exotic locations. Data collected by travel website TripAdvisor shows that Chinese have become more adventurous, with cities such as Dubai, Rome, New York, and London among their top 20 online searches. Hong Kong, however, remains the most popular destination searched over the summer. Interest from Chinese travelers shot up 50% from the same period a year ago. The Thai beach resort of Phuket, just in case you're curious, came in second. And that's the latest from Hong Kong. Phil, back to you.
A little travel segment, Tara. Thank you very much. For Brazilian women, hair is big business, and the latest trend is natural hair extensions. But they're expensive, and they come from many questionable sources. Lucrecia Franco has more from Rio de Janeiro.
Brazilians are known for their beauty, but hair has always been an issue in this multiracial country. It's seen as a badge of beauty, but much of the long, beautiful straight or wavy curly hair you see on the streets is not natural. At one of Rio's most famous hair stores, extension sales are booming. Some are made of synthetic fibers, others mixed with real human hair, and work like magic.
If you have like a hair extension, you have a wedding at night,
In like 5 minutes, you are ready to go to a wedding.
The craze for long hair, however, is expensive. A kit with 8 clip-on extensions can cost up to $1,000 US. However, by far the most popular trend is to have 100% real human hair. Inés Telecisna, a manicurist in a salon in Rio de Janeiro, added straight natural hair extensions, and she couldn't be happier.
Não gostava do meu cabelo.
I did not like my hair. I did not feel good because it is curly and thick. Now it's easy to maintain and I love the way it looks. This hair lengthening was marvelous for me.
She bought her human hair extensions a year ago and paid $800 US, but she does not know who the hair belonged to. Human hair is a big, lucrative global business, but few retailers in Brazil are willing to reveal where they get it, since an underground market has popped up worldwide. Although there are no official figures for the human hair business in Brazil, women here spend more time and money on hair than any other in the world. According to a recent report from the hair industry, it adds up to more than $20 billion US per year, almost 1% of the country's GDP. And with some 40 million people joining Brazil's middle class, some women, like Inés, think it's better to feel good about themselves, no matter where their human hair extensions come from. Lucrecia Franco, CCTV, Rio de Janeiro.
Auction house Christie's is now the first international fine art auction company to operate independently in China. Christie's was recently granted a license and will hold its first auction later on this week. Christie's is also praising the upcoming free trade zone in Shanghai, saying that it should help import of the artwork into the mainland China. That does it for our broadcast this evening. We invite you to join us again tomorrow evening and every evening. For viewer comments or suggestions, you can email us at bizdc@cctv-america.com. You can also follow us online at cctvamerica.com. And don't forget, for YouTube users, check out our stories at BizAsiaAmerica. And again, if you have viewer comments, email us. And again, our top story has been the Smithfield acquisition by a Chinese company, which has been finally approved. That deal will likely get finalized on Thursday, but it's a big story. We'll continue to follow developments here, and of course in Beijing. They'll also be watching that as well. Michelle McCory in New York City, myself here in Washington, D.C. Thanks for watching BizAsiaAmerica, and we will see you tomorrow.